Well, hello everybody. My name is Alexi Kaplan. I'm a certified public accountant, licensed by the wonderful state of New York. Been in business for quite some time. But in any case, today is all about you. And thank you for joining me on this webinar. This is a test run. The live webinar could not happen because of technical difficulties. I will try to make this as smooth as possible, as exciting as possible for you to watch this replay of the webinar on my YouTube channel. I'll do the best I can within the time slot allocated to this. So let's, without further ado, let's dive in to our roadmap to financial freedom. Now, as you can see, the title of today's webinar is How to Get Your Tax Problems Resolved and Get Your Life Back. It is not there's a reason why I actually decided to name this webinar this way, because it's important for everyone to actually know why they're here. And that is how to get your tax problems resolved and get your life back to where it should be versus how it is. So our ultimate goal is to say no to IRS problems. That's the ultimate goal, and say yes to a life free of financial troubles. I hope you like my slides. I spent a lot of time making them. Our roadmap to financial freedom. So during the next 45 minutes or so, I'll take you on the ride of a lifetime, and we'll prove that you can get your life back and you can resolve your tax problems. And that is my promise. So question, does anyone here know what road we should take? Well, it's an interesting question because there's a lot of different roads. A question mark next to it. And the reason why, because there's many paths you could travel, but there's only one or maybe two that are accurate. So I know which road you should take and how you could stick around. As long as you stick around, I'll show you how. Is the actual goal on our roadmap to financial freedom. Another question for you. Have you ever dealt with the IRS before? I know it can be a little bit overwhelming, stressful, annoying. It's not easy dealing with the IRS. Does this seem familiar? Once again, the actual people that are portrayed in this slide are indeed overwhelmed. Trying to sort things out on your own with all the correspondences you receive from the IRS can definitely be overwhelming. The main thing is that a lot of my clients tell me that dealing with the IRS is stressful. So is it really stressful? You could bet that it certainly is. This is the pictures of the people that are definitely stressed out. And dealing with the IRS can be really stressful for taxpayers and practitioners like myself alike. The other thing is a lot of my clients tell me that they lose sleep. They can't sleep at night. They're worried about what's going to happen in the future, and rightfully so. So are you getting a good night's sleep? I don't know. Do you find yourself crying more frequently? Well, some people do. And the reason why is because they just don't know what to do, who to turn to. So you can't sleep at night. You cry more frequently. And as you can see, some of our celebrities do this all the time. Whether on camera or in real life, you could definitely relate to this if you attended this webinar. Are you scared of the big and bad IRS? Well, being afraid of the IRS is not, in fact, uncommon. The typical myth is that IRS is this big bad wolf that will come and get you, and not just you, but everything you've got. So being afraid of the IRS is likelihood of something happening and occurring in your life, because the fact is IRS is the biggest collections agency in the world, and it has the resources to enforce collections like no other agency of its kind. The fact is, this is where you are right now. You know that you owe the money to the IRS, and as a result, you can get overwhelmed, you can get stressed out, you can lose sleep, you can become more emotional, and be constantly on the edge because of your fears. And this is where you want to be. In fact, this is where you deserve and need to be. You need to be happy with yourself and enjoying the life to the fullest with the people that are dear to you for many, many years to come, and stop worrying about the IRS. So what are we going to cover today? I'll cover most common mistakes people make by getting themselves into the hot water with the IRS. The most common types of alternative collection actions that the IRS can take against you to collect the money that you owe to them. The tax debt resolution alternatives on how you could clean up the mess from the past and obviously not create it in the future. Now, I do say obviously, but most people still do it after they have resolved their prior problems, and unfortunately make the same mistake twice. And as a bonus, I'll give you 7 secrets that the IRS does not want you to know. How does that sound? Good? So I would like you to stick around, unless, of course, this is where you want to stay. You don't have to continue with listening to me as long as you're comfortable being where you are today. And that is here, right? Stressed out, overwhelmed, emotional, scared, can't sleep. You don't want to be there. So just stick around. Because this is where you need to be, and this is where you want to get. And I'll help you to get there. So, great news. I will definitely continue to drive you towards our goal. And that is to achieve the financial freedom from the IRS and to live a happy, fulfilling life you so rightfully deserve to enjoy. Now, who am I? Why should you listen to me? I mean, a little bit of information about me will never hurt. And I love this slide. And the reason why is because one of my friends shared it on Facebook. I liked it so much simply because it portrays different views on how society sees us. Us, I mean tax professionals. Now, obviously, what my friends think I do is just constantly read books. What I think I do, I'm the champion. I'm running a successful practice. I'm helping a lot of people. My mom thinks, I'm constantly on the phone, working and smiling and making money. Society thinks I'm the richest guy out there as a tax practitioner because I constantly keep counting money. And what I actually do is I'm buried with paper. The paper that you don't want to deal with, the paper that needs to be examined, the paper that needs to be discussed and presented to the IRS in order for my clients and for me representing my clients to achieve the most favorable results they so rightfully deserve. Now, once again, who am I? Why should you listen to me? My name is Alexei Kaplan. I am a certified public accountant. I am the founder and principal of A. Kaplan CPA PC as a professional corporation. I am a member of American Society of Tax Problem Solvers. Now, this society is a non-for-profit society that has members specializing with what I do, and that is tax resolution. I'm also certified QuickBooks Pro Advisor. That means, in plain English, is that I'm certified to teach people how to use QuickBooks. And that always helps as well, because in businesses, a lot of business owners simply do not know where to begin. And they reach out to me so I could guide them and for them to do their books the right way in order to keep a good paper trail, just in the event IRS or the state agencies would want to review some of their books. Now, besides from that, I'm out and on my beautiful $1 million smile. I'm also a graduate of Brooklyn College. I do hold 2 separate bachelor degrees. One of them is in business management and finance, and the other one is in accounting, CPA qualifying. And aside from that, and I did not list it on the slide, I am a serious and a serial entrepreneur, meaning I've owned and operated and started many various types of businesses in the past. I have been successful in growing those businesses and molding them into very successful enterprises. and I've reserved myself for the past 5-6 years to simply concentrate on what I do best, and that is to run my accounting practice aside from any other businesses and concentrate on helping people such as yourself or some of the friends or people you may know that are in trouble with the IRS. And I think it's very rewarding, and that's why I've dedicated my practice to pretty much exclusively to tax resolution work. However, besides that, I'm also a family man. I am an immigrant. I'm not a natural born citizen. I have immigrated from Ukraine at the age of 12. That's why you probably sense some of my sexy accent. Some people may think that. When I came here, I did not speak a word of English, and I had to learn from scratch. At that same time, I had to start working as a flyer boy. That's the only place that would hire me. I was only 12, to help out my parents and my younger sister because we were really struggling. I do love to help people that actually need help, not just because they feel that they deserve to be helped, but because they need help, and they generally want the problems to be resolved. I am a proud husband and a loving father of 3 wonderful kids that I love so dearly, and I do everything for them. And I am, as I mentioned before, a professional entrepreneur. Now, aside from all of this, enough about me. Today is all about you. And it's a pretty self-explanatory picture. And by this picture, I really wanted to demonstrate that I will do the best that I can by attempting to take you from being scared, sad, overwhelmed, stressed out, to being simply happy, secure, and comfortable. How does that sound? Good? I sure hope so. So let's see what we cover first. The most common mistakes. Now, how do people get themselves in trouble? And I think it's important for you to realize this in order to learn from it and remember about these things in order not to make the same mistakes again. Or if you know of somebody that may be on the verge of attempting to make certain mistakes, to try to guide them with the information I'm about to provide you with. So without further ado, obviously you don't want to be that crab, in a hot water by being boiled with the IRS. So let's keep going. So what are the common mistakes? Now, the simple scenario, you get a letter from the IRS. Well, before that, you can have various reasons as to why you did not answer to the letter or did not file your tax return. In either case, every tax problem starts with ignoring the IRS. And to represent that, I did come up with a scenario, and that is that you get a letter from the IRS stating that you previously filed tax returns under examination or audited. That's pretty much what it means. And you need to provide the IRS with a number of things, X, Y, and Z. Now, what your reaction is that, well, and once again, these reactions are actually confirmed reactions from some of the clients that I was representing in the past. Some of the reactions could be like this: I do not want to deal with the IRS because they're all scumbags with badges. Well, that may be so, but it still does not give you an excuse not to respond to that letter. The other thing is that, why should I worry about my tax bill? Let them worry. Sure, they'll worry. They'll let you off the hook for a couple of years, but then they will definitely catch up. Sooner or later, they will catch up. Another thing is that, oh, it must be a mistake. I do not have time to deal with this right now. Well, too bad, because you kind of need to. Any correspondence you receive from the IRS, you should not ignore at all, at any time. You should bring it to the professional advisor of your choice that actually knows how to interpret that letter and explain to you what needs to be done. So this is actually mistake number one. And by you doing nothing, the letters are starting to pile up. Now, the other thing is, after this initial letter, and if you ignore it, you don't do anything, you get, after a certain time, a notice of deficiency. And what that is basically demand for payment of balance that is owed to them and explanations as to what they can possibly do in the event they do not get paid. Now, once again, reactions can be different, and some of them I've summarized here. And that is, oh, I'm a too small of the fish for the IRS to go after. Not really, because most taxpayers that owe money to the IRS are actually individuals. So there's no such thing as small fish. It's a lot easier for them to collect money from small fish than go after a shark, because the shark will definitely put up a fight, and they know about it, and they do have limited resources. So do not do this. This is not good. Or another thing is, oh, a friend of mine told me that it was not that if I wait long enough, IRS will leave me alone. Your friend is probably the last friend you want to talk to if he tells you that. And the reason why, yes, he may be partially right, because IRS does have a statute of limitations on the time that they could actually enforce collections actions against you. And that statute is 10 years from the date of the assessment, meaning you filed tax return in 2012. They have assessed, they have determined pretty much that you owe them additional money for that year 3 years later in 2015. From 2015, they have 10 more years to collect the money that you owe to them. Now, that does not count the running of the interest on the total amount outstanding and the penalties that they may assess against you. So keep that in mind. Don't listen to your friends. The other reaction is that, oh, if I wait long enough, IRS will settle my debt with pennies on a dollar. Well, guess what? You probably saw a bunch of infomercials, the commercials on TV, saying that we settle your cases with pennies on a dollar. Oh, I owed $100,000 to IRS, was able to settle it for $5,000, so forth and so on. Now, these cases are very individual and very unique. There's no such thing as definitely settling money, because you have to qualify, and that's the key term, qualify, based on your existing financial situation, to see, and there's a lot of different tests that the IRS performs before actually letting you apply for the offer in compromise or settlement with the IRS. And that is, the qualification requirements are very stringent. They look through your financial current, not past, what happened before, but now. What's going on with you now? What's your reasonable collection potential? Now, what does that mean? That means that within the period of time that we have a right to collect money that you owe to us, how likely is that we are actually going to collect them based on your current situation? Do you think we'll be able? Do you think that we would be able to collect the total amount due or not? If the answer is not, then they may entertain the offer, but once again, it has to be reasonable. So the qualifications for the offer and compromise are very, very strict, and most of the people do not qualify. So once again, if you do nothing and you keep making these mistakes by ignoring the notice of deficiency, it's a mistake number 2. Now, keep going. Same thing, notice of deficiency. There's a different reaction. Let me call my nephew and have him call the IRS to find out what happened. He went to college. He's smart, and I'm sure that he can take care of my problem. Whew. Or the other thing is that, let me call the IRS. I'm sure that they will be able to fix the glitch that caused me this problem. They are very nice people. One more. Let me pay whatever they want. Even if I do not have any money to pay them right now, so I just want to pay them to get them off my back. Now, these reactions are, once again, they're actual reactions from some of my past clients. Now, generally speaking, I can pull my own tooth, but I choose to still have the doctor do it for me, right? I can change my own sink, but I choose to have a plumber do it for me. Or I can make my own shoes, but I choose to purchase them from the store.
I could also grow my own apple tree, but I choose to purchase apples from the supermarket. In most cases, it is always better to have a tax professional specializing with tax resolution to make all of the contact with the IRS. So that's pretty much it when it comes to this slide. Now, the next thing is that some other reactions, and I do want to give you a lot of different scenarios because they're important. Each one of them is different, and each one of them is something that has happened with my clients in the past. This is how they landed themselves into the hot water, quote unquote. So one of the other reactions is that, did I file my tax return for that year? I'm sure that my accountant put it on extension and then filed it for me. The other thing is that if there's a problem with my taxes, I'm sure that my accountant will take care of it. He prepared and filed them all, not me. Well, here's my point. Never, once again, never, and one more time, never assume anything. When you assume something as important as filing your tax return and rely heavily on the third party to do that for you, it is a problem waiting to happen. Whenever people assume, it often happens that they are making, as you probably know this, the ass out of you and me. And forgive me for using this kind of language, but it's extremely important, and that's why I'm stressing it out in the language that is easily interpreted and understood by pretty much anybody. Never assume. Be proactive rather than being reactive. Now, you must sign for all of the returns that are being filed on your behalf, not your accountant or anybody else, because you, as a taxpayer, are ultimately the only one that is responsible for all of the information that is reported on your behalf. Your accountant will not get the letter of deficiency. You will. Just remember that. Now, I cannot tell you enough how many people contact me to amend their returns that they did using some kind of a cheap online software like TurboTax, HR Block. They have a lot of them nowadays. Not only do they pay me my full fee after I complete their amended return because of the mistakes that they're made, but they spend more money on software and their own time that could have been used for something else. People that are looking for cheaper ways to save a buck typically end up spending 4 times the amount they plan to save. Do not look for cheaper, unreliable, and ineffective ways to file your tax returns. I urge all of you to always seek help from a tax professional. Now, here's another thing. Well, yeah, this is pretty much we just covered. I know that there's somebody that I know that I filed my own taxes for that year using TurboTax. I'm sure I filed my taxes accurately. Don't assume, once again. Who was that guy in the laundromat that filed my tax return last year? That's the cheaper alternative I was just referring to. Let's keep going. So the summary. To summarize this, it's, once again, ignorance is not a bliss. Do not ignore letters from the IRS. Don't wait or it will be too late. Do not procrastinate. Be proactive rather than being reactive. Now, take responsibilities for your own actions. Do not delegate tasks to unqualified people. And never, once again, never, one more time, never assume, because you will be making an ass out of you and me. And the last but not least, stick to what you know best. Do not try to be someone that you're not. Keep working, keep making the money, and leave filing for your tax returns to the tax professionals, qualified tax professionals, once again. So, any questions so far? No, yes, maybe. We'll cover some of them at the end, most likely. So let's keep going. So we covered so far the most common mistakes. Now, did I nail the hammer on the head with my presentation on the common mistakes people make? I think I did. Otherwise, you would not be here. Well, great. Let's just move on. Now, most type of alternative collections actions by the IRS. I love this slide because it represents exactly where you do not want to be or associated with in this picture, right?
That's what I thought. All right. So some of the IRS collection enforcement alternatives. In the event that you ignore the notice of deficiency that I told you about, that's the demand for payment, and do not attempt to contact the IRS to make a payment arrangements, IRS may enforce collection actions by including, but not limited to, the following. Number one thing they love to do is placing levies on all your bank accounts. I hope that this has not happened to any of you yet. You do not have access to your funds and need to pay for your life necessities. Can be really frustrating, overwhelming, and painful. Now, the next thing they could do is garnish your wages, which is your paychecks. Getting your paycheck and seeing 25% decrease in your take-home pay is scary. Don't you think? That's one of the other things they can do. Now, they may place liens on any and all of your assets. What does that mean? You will not have the ability to refinance or sell your house, not being able to sell your car, and not be able to use your retirement plans like 401k or IRA until IRS gets paid is really intimidating. No? Now, having they may actually, once they put a lien, yes, they may actually enforce collections by selling off that asset, by attempting to sell your personal residence or other assets. And what could happen is that having a sheriff come over into your home or place of business with a warrant to auction off your house, car, business machinery, and etc. is really scary. Now, they can also revoke your passport, so you would not flee the country. Depending on the amount, obviously, that you owe to the IRS, they don't do it in all the cases, and the amounts are adjusted from year to year. This is something new they started doing, actually. Your passport may be revoked. And the funny thing is that you may not even know about it. And you'll find out about it at the airport. You will not be able to travel outside the country. And that's, I don't know about you, but for me, guy with a family that likes to travel, is kind of, how should I put it nicely? It's not good. I'm pretty much a prisoner of my own country. I can't leave, not even Canada. That's kind of scary. All right, so let's keep going. So this is a common types of alternatives. So let's go with what can be done. So by now we have covered the common mistakes people make and common types of collections actions IRS can take to enforce their collections. So let's talk about what can be done with regards to fighting the IRS. Is that okay with you? All right, so let's go. So this is a summary for common mistakes. This is the summary of the action. So yeah, the slide's a little off. I just noticed. In any case, to recover the amounts that you owe to the IRS, this is just to recap, I guess. So let's go back a little. Sorry for this. It's a live event. All right. So common mistake summary. Ignorance. We already learned this, that ignorance is definitely not a bliss. Do not wait or it'll be too late. I like these quotes. I created them myself, by the way. Take responsibility for your own actions. You probably heard this as a kid, and I keep hearing this from my wife by having 3 kids. And never assume. I like the acronym ASSUME. Assume, do not do this. This is bad, bad, bad. I can't stress enough that do not assume. Just don't assume. And obviously stick to what you know best. We covered this. Now, as far as the collection action summary, to recover the amounts that you owe to the IRS, they could freeze your assets, garnish your wages, take possession of the home or put a lien on it, seize your business, freeze all your bank accounts, revoke your passport that you can't travel. It's quite a bit of trouble they could create for you in a very brief amount of time. Bottom line is you do not want to be in a hot seat when it happens. So, most common tax debt resolution alternatives. You do not want to be associated with this picture, right? Or maybe you do. Why not, right? You have debt. We got the debt relief, and now you're free.
So you don't want to be associated with the left part of the picture if you're looking at it, just to keep things going smoothly. All right, so most common tax resolution alternatives. Here's the pretty much summary. Now, when you know that you owe money to the IRS, you may pay the balance in full on your own, request installment agreement and pay the balance in full over time, request to be placed in currently non-collectible status. I'll go over this in a couple of slides. Request to be considered for the offer and compromise candidate. That's the settlement that I briefly touched upon. Challenge the original examination by requesting audit reconsideration. That's a difficult thing to do. Request penalty abatement on penalties associated with outstanding debt. Now, this is obviously not all the things you could do. It's just very few common ones that are generally practiced by practitioners that are being successful. There's a lot of other ways as well. So let's cover this. Option 1. So if you agree with the bill that you receive from the IRS and have the money to pay them, then pay the bill by the specified due date and move on with your life. Now, unfortunately, most of you here probably do not have the money to pay the IRS the full amount due, and this option would not really apply to you. Now, obviously, I'm assuming, and I could be making an ass out of you and me, but most folks don't have the ability to do it. Now, option 2, installment agreement. Now, installment agreement is one of the IRS's programs that allows taxpayers to partially, I'm sorry, I'm a little under the weather today. So it's one of the IRS's programs that allows taxpayers to pay off their debt in monthly installment payments. Now, the total amount can be paid in full of what is owed, or, depending on the circumstances, it can be partial amount. There are 3 types of installment agreements, and depending on individual situation, one type of installment agreement is more beneficial than another. There's partial pay installment agreement, since Fresh Start Initiative. There's a streamlined installment agreement and full pay installment agreement. Now, I could be spending hours in each type of these installment agreements, but I'd rather use the digest version, just a little piece of my knowledge and experience. And by sharing it with you, and obviously in detail, I could be more specific if you'd like to know more, but not on this webinar. So let's keep going. Now, there's option 3, which is request to be placed in currently non-collectible status. Now, what does that mean? If the taxpayer is unable to pay his or her tax liability and collection activity would create an economic hardship, the IRS will consider placing the account in the hardship or currently non-collectible status. That's just another term for hardship. IRS will compare taxpayers' monthly gross income with what's known as allowable expenses. The allowable expenses are national averages for expenses such as food, clothing, miscellaneous expenses, housing, transportation, medical, insurance, as well as property tax withholdings, and payments. Keep going. We could definitely, not definitely, but option 4 is the most common option, is the offer and compromise. Now, there are 3 types of offers and compromises. Essentially, it is an agreement between the IRS and the taxpayer to settle the debt for less than the amount owed. Settlement. The IRS will not accept an offer and compromise settlement if they believe that the liability, what I've mentioned before, the liability can be paid as a lump sum or through the installment payment plan arrangements. So what you hear on TV and radio regarding paying or settling pennies on a dollar is partially true. However, it is not easy to qualify for this arrangement, since the IRS looks at the taxpayer's income and assets to determine the taxpayer's reasonable collection potential. I've covered it before, but this is just in more details. But there are some great news, though. With Fresh Start Initiative program, as of January 12, 2012, the IRS has made some liberal changes to the offer and compromise program that favors taxpayers.
As a result of those changes, there will be more offering compromises accepted than ever before. And they will be accepted for lower amounts as well. Just to give you a little statistic, as of 2015, the acceptance rate went up to 40+% of the acceptance rate for all offers and compromises submitted, meaning 4 out of 10 that were submitted were accepted, versus in 2011 it was only 20%. It's a huge difference. It's double. They're accepting double the amount of offers that are being presented to them. That's great. Now, let's keep moving. Once again, I could do another webinar just on offer and compromises, just like I did for installment or any options that I'm covering in this webinar alone. There's a lot of information. You generally just need to know little bits and pieces as to what's relevant versus all the minor details that are changing constantly. Option 5. Honestly, not my most favorable or favorite option, which is audit reconsideration. However, it is still one of the most effective ways to obtain tax resolution of the case. Now, essentially, this option provides for the opportunity to challenge original audit or examination that has resulted in the assessment of tax liability. The request has to be made, and additional supporting documentation must be provided in order for the IRS to even reopen the case and conduct audit reconsideration based on new supporting information that has not been made available during the original time they have examined the tax return. That's what makes it a little challenging, because it has to be something new. And most of the times, taxpayers, they don't know what to do, so they give bits and pieces to the auditors, and as a result, created, and then tax practitioners like myself have to get them out of it, and at times this could be the most favorable option. Keep going. Excuse me. Request for penalty abatement. Now, what's a penalty abatement? You may request a removal or abatement of penalties associated with outstanding tax liabilities in a couple of ways. First, you can request first-time penalty abatement that will automatically grant you one-time consideration of removal, which is abatement, of all penalties attributed to only one tax year, assuming that you were in compliance before. Now, compliance meaning timely filed tax returns. Second is a reasonable cause penalty abatement that needs to be approved based on a variety of reasonable causes. If your request is approved for either one of the penalty abatements, your entire tax liability is reduced by whatever the penalty and interest amount on these penalties from the total outstanding amount, which can mean thousands of dollars. Now, this option I actually use a lot. Because most of my taxpayers, not only do they have outstanding liability to the IRS that they have not paid, but on that liability, IRS could actually place over 186 types of penalties on top of the amount, outstanding amount to the IRS. So, generally speaking, penalty abatements work. Not all of them get accepted, as long as you could demonstrate that it's reasonable, that you had a reasonable cause for either filing late or paying late or a combination of things. Then they typically remove the penalties and any interest associated with those penalties. But it's not an easy process. Once again, everything you got to put up a fight. Let's keep going. So this is a summary. We got pretty much different alternatives. We could pay the balance in full, request installment agreement, request currently non-collectible status, which is a hold for economic hardship. We could settle the debt by doing the offering compromise. We could do audit reconsideration if we really believe that the auditor has made a mistake, give them new facts. And we could request penalty abatement to possibly remove some of the penalties that were assessed and placed on top of the outstanding liability. Now, warning. Now, this is extremely important. IRS will not even entertain the idea for doing any kind of resolution of your case if any of these items apply. Now let's go over them. You have to file any past due returns. They will not talk to me or anybody else representing you unless you are current and compliant with. And part of these things is that you have to file all tax returns that are due up to the date that you're ready to do some kind of a tax resolution for your case with the IRS. The other thing is that you have to make all the mandatory required federal tax deposits. Now, what does that mean? It means that if you're sole proprietor, Schedule C, you do nails, you have to do quarterly payments. Okay, that's if you owe money, and if you don't, they will not talk to you. Once again, you got to make the estimated tax payments. You got to make sure that the payroll taxes are all paid up to date. Now, what's the main takeaway? To get the agreement, yes, you must be current on all your tax filings, and you must be current on all your payments due. Okay, so it looks like we covered the mistakes, we covered the alternative collection actions, and we covered the choices we have. So what's now? I do have a treat for everybody that gave me the opportunity to present in today's webinar. It is kind of my way of expressing my gratitude for your time and personal benefit of hopefully helping each and every one of you present. Would you like me to keep going? You can see the bonus section now. I'm sure if you were in the webinar, you'd say yes, but since it's a test and it's just being recorded, you can't really type. So let's move on. All right, 7 secrets that the IRS does not want you to know. Secret number 1, file all legally required tax returns on time. Now, this is very important. Many people don't realize that the IRS can charge a penalty of up to 25% just for late filing of your tax return. That's right. You will get penalized additional 25% on top of what you already owe for not filing your tax return. Therefore, do not miss a deadline for filing tax returns. It is even worse for payroll taxes if you are self-employed. Now, what most people do not know is that you can file any tax return on time and avoid the 25% penalty, even if you do not send in the money owed. Balance due. At least you're not going to have to pay that penalty. Now, let's see. Secret number 2. Do not pay IRS penalties. IRS has over 140, well, actually it's about, I think it's 100 different types of penalties that they can enforce against you. The worst thing is that IRS can also charge you on interest and additional penalties on the original penalty. However, IRS penalties can often be reduced to 0 if you have what's known as reasonable cause. Now, we covered the penalty abatement before, deeper into it. You probably want to know what reasonable cause really is. And in my experience, reasonable cause is that it can be anything as long as it is reasonable. Examples of reasonable causes may include medical reasons, ex-spouses, bad advices from prior accountants, from your friends, mostly accountants, natural disasters, drug and alcohol abuse, ignorance of the tax laws, reliance on the IRS's advice, death in the family, helping or caring for loved ones, and etc. As long as it's reasonable, they'll take it. Secret number 3. You do not have to talk to the IRS auditor. Interesting, huh? Yeah, it's true. You do not have to talk to the IRS auditor. As a matter of fact, talking or meeting with the auditor by yourself may be the worst thing you can ever do. Taxpayers' Bill of Rights allows any taxpayer to have representation by qualified practitioner who can answer questions and provide documentation to the IRS on your behalf. Problems may start when taxpayers attempt to handle their own audit or hire the person that has originally prepared their return that they were audited on. The main reason why it is typically does not work out in taxpayers' favor is because most tax return preparers do not handle IRS audits on a daily basis. They can easily be intimidated by the IRS, which usually results in a less favorable outcome, if any, for tax preparer, for taxpayer, for both of you, but mostly you. So remember that. Secret number 4, you can beat the odds during the IRS audit. Yes, you can. Statistically, IRS wins about 80% of the audits whenever taxpayer chooses to represent themselves or hire unqualified practitioner. That's 8 out of 10. They win. The way IRS sees it is that the taxpayers are deemed guilty until proven innocent. That simply means that an audit can start off with IRS disallowing every single deduction you made on your tax return until each one of them is proven to be legitimate. Qualified representation for audits can significantly improve your chances for successful tax resolution. As the saying goes, he who is his own lawyer has a fool for a client. You must treat the IRS audit as seriously as you would a murder trial. And it's a fact. Would you go to court without a lawyer? Probably not. Then why would you go see an IRS before the IRS without competent representation? Makes sense, right? All right, let's keep going. Secret number 5: IRS audits can be resolved quickly. It's true, of course they can be. Now, based on my experience, the best way to end the IRS audit with great outcome is to end it at the first meeting. Whenever I represent clients in IRS audits, I actually perform trial audit in my own office first, before even meeting with the IRS. Now, what does that mean? I audit your books. I see what's happening. I know what they'll be asking for. So I'm ready for it. And since I did it before the actual audit with the IRS or meeting with the IRS agent or officer in some cases, I know what supporting documentation you need to present. So it enables me to know every area that needs more supported documentations or answers. When I actually meet with the IRS, and most of the time is without the client being present, I can quickly answer auditors' questions and provide required documentation to get to the bottom line. This way, IRS's auditor's job is being simplified, since I provide him or her with all of the answers that they're looking for, and we're able to resolve the situation right there and then. How do you like that? Secret number 6: the IRS cuts deals. Sounds good, right? The IRS does not make deals on taxes owing, including all penalties and interest. Requirements for getting those deals done may be strict, but if you qualify, the results are incredible. In order to qualify for a deal with the IRS, the balances that you owe to IRS should be at least $15,000. And you have very little equity in the assets that you owe. That's like the ideal candidate. Also, you must be using your monthly income to pay your necessary living expenses and not have a lot of money left over to pay your old taxes. If you meet these requirements, then you will most definitely owe it to yourself to explore the possibilities of getting a reduction of up to 90%. That includes all the penalties and interest and the original amount owed. Only if you qualify. Once again, the IRS will cut this deal to you so you can get back into the system as a current taxpayer and for them to collect a few dollars on the old taxes. However, in the fine print on these types of deals, you'll see instructions and it will instruct you to file your tax returns on time and pay on time for the next 5 years after they have agreed to accept the offer. Or the deal is simply off, and you are back in the same settle and the same old tax debt. All right, secret number 7: you do not have to live in fear of the IRS. It's not really a secret, but it is a secret. Knowledge is definitely power. Knowing your taxpayer rights gives you the leverage when dealing with the IRS. Instead of feeling powerless when up against potentially crushing back taxes and IRS penalties, knowing your rights as a taxpayer or having qualified and experienced CPA, enrolled agent, or tax attorney on your side is the best way to understand all of the options available to you for permanently solving all of your tax troubles. I know that IRS tax problems can cause an immense amount of fear and anxiety. My sole mission and passion is to provide tax help to those who feel hopeless against the IRS. And my role is to negotiate the lowest possible IRS payment amount allowed by law. I truly believe that there is a solution to every problem. I have tremendous success helping people get their lives back and turn their lives around for better. If you have IRS problems, you owe it to yourself and your loved ones to get help today. Now, let's recap. Over the past 45 minutes or so, we have covered the most common mistakes, the most common IRS collection actions, the most common tax resolution options, and ammunition, as I'd like to call it. I have shared with you the 7 secrets that IRS does not want you to know, and now it brings us to the last part of the presentation where I will reveal to you my one-time offer as a way to thank you for attending my webinar. Does that sound okay? All right. Now it brings us to the last part of the presentation. Let's see. Road to financial presentation. Oopsie doopsie. Did I miss something? Yeah, I think so. All right. So what do we got here? This is okay. So I'm sorry. Live. Okay, roads to financial freedom. Now, remember, there are many roads to financial freedom. Which one will you take? The road that got you to this point in your life, or the road that will get you out of it? I did share some insights on all the things that have affected your life up to this point. I'm here for you, and I'm here for you. I'm here to help you. I have made myself available over the next few days and would love to speak with you one-on-one and see if I can help you resolve your tax situation. This is our goal, is to say no to IRS problems, say yes to life free of financial troubles. This is where I want you to be. So the one-time offer is, being an ostrich obviously will not help you. Running away will not help you as well. Here's some facts is that IRS problems do not go away by themselves. You cannot hide from them or avoid them. The longer you wait, the worse they become. You may attempt to resolve them on your own. You may ask your accountant to help you. You may gamble, roll a die, go all in on your own. Or you may simply click the link below and schedule 30-minute free consultation with me on the phone. The link is not here, but I will share with you my contact information at the end. If it was a live event, you'll get the link. Sorry for this once again. So here's my offer. It is a limited time offer. The phase 1 initial consultation fee, phase 2 evaluation of your case will be waived for the first 10 people that actually schedule a call with me. The phase 3 will be based on what we find out in phase 2 and phase 1, and that obviously will not be waived because I don't know which road we'll take. I don't know what will you qualify for.
But I am doing something crazy today, and that is pretty much letting go of $16,000 of my own fees to help you. So let's just do some questions while you're thinking about it. Well, before we do the questions, I do want to say something else. I do have limited availability. I will only be able to accommodate 10 people or so for free tax resolution consultation, and then obviously evaluation of your case. When you schedule your consultation, you will be asked to provide me with some questions that I need for my analysis before our call. Please take all your time and provide me with the answers. There'll be a questionnaire, about 15 questions. Be as detailed as possible. I do take my time very seriously and will only work with people that really need my help. I am the only one that will work on your case from beginning till the end. And as a result, I can roughly handle only 100 to 125 cases per year. I did waive my initial consultation fee in its entirety, and I did waive my evaluation fee of the case for the first 10 people as well. I do think I'm a little crazy by doing this, but I do want to help you. That's the most important thing. Now, national tax resolution firms that you probably hear about or see on TV and radio will not do it for you at all. Or your accountants, they possibly created this problem in the first place, will definitely not do it for you. I do truly believe that transparency is the only way to be successful. Whether you like me or you hate me, I can promise you one thing. And that is, I will be honest with you from our first conversation, and I will never sugarcoat anything. I call things the way I see them. And that is one quality about me that I refuse to change. Why? Because it works. The way I see it is that by you acting on my offer and scheduling a free consultation with me, you have absolutely nothing to lose, except for those sleepless nights, of course. So take the action today, and I'm pretty sure you will not be disappointed. So let's go into something else. Questions. You don't have any questions, but I do have some common questions that some of my prior clients asked me, and I will definitely discuss them right now. Just give me 1 second, please. Let me find them. So I owe the IRS back taxes, but I don't have any money to pay them. What should I do? Common question, right? There are several situations where the IRS will work with you to provide you with the tax relief. You may qualify for a monthly installment plan that will be covered today to pay off the amount in full within the 5-year period. If you don't qualify for this program, you can also pursue offering compromise that we covered. With the offering compromise, the IRS agrees to settle your back taxes for less than what you owe, requiring a lump sum payment or a short-term installment agreement. If you're unable to pay anything at all, you may be able to help you. We may be able to help you with the IRS to declare your account currently non-collectible. When successful, IRS will agree to suspend all and any collection activities on your back taxes for about a year. It is always best to have obviously qualified certified public accountant, attorney, or enrolled agent negotiate your case with the IRS. Next question. I don't have any money to pay the IRS this year for my taxes. I don't have the money IRS this year or for my back taxes. What should I do? Okay, so this is more current. That's right. I thought I made a mistake. Well, first of all, almost 20% of all Americans have a tax problem. 20%, that's 2 out of 10 people have a tax problem. And many don't have the money to pay back taxes to the IRS. The absolute worst thing that you could do is bury your head in the sand and hope that it goes away. You should file your tax returns even if you can't afford to pay them. Pay them, meaning taxes owed in those tax returns. Not filing them will cause you to receive the monthly fines of up to 25% of what you owe. We covered that too. If possible, pay your taxes with a credit card.
since your credit card's interest will be less than the IRS interest and fees. Let's keep going. I'm thinking about filing for bankruptcy. What kind of IRS debt and back taxes are dischargeable? Well, depending upon what type of bankruptcy you are filing, will determine what is actually dischargeable. For both Chapter 7 or 13, Chapter 13 bankruptcy, certain types of debts, including interest and penalties on IRS back taxes, may be discharged. However, personal income taxes are the only tax debts that may be discharged in bankruptcy. The tax debt from unpaid payroll taxes and federal excise taxes, trust taxes, that are collected by employers on behalf of the employees and remitted to the IRS are never dischargeable. Also know, if you have not filed a tax return for certain years, then you cannot discharge those years' income taxes. Hope this helps. Now, can the IRS come after me personally if I owe payroll taxes or employment taxes? That's actually a very cool question, and I think it's a good question. The answer is yes. Payroll taxes and excise taxes are trust fund taxes, meaning you have collected them on behalf of the IRS and you have to remit them to the IRS. If you haven't done so, you're in deep, deep hole and possibly very hot water. So, in other words, when the employer collects it, the employer must then collect these revenue and submit them to the IRS. The IRS can levy penalties against any person who's a CPA, accountants, bookkeepers, etc., that not only fails to collect and pay the IRS withholding tax. In these situations, you could try to negotiate installment agreement or the IRS offering compromise program to settle delinquent payroll taxes. Yet the best way is to have a qualified certified public accountant, attorney, or enrolled agent negotiate your case on your behalf when it comes to trust funds or payroll taxes. And I think we have a few more questions, and I think we should be wrapping up. So, another question. What are some of the most common IRS audit red flags? Now, don't you want to know that? I think you do. All right. So, the IRS has grown more aggressively about auditing people in recent years. Yet, know that it will only invest time auditing returns it believes will conclude with more tax money being collected. The most common red flags include failure to report income. If you earn money, you don't show it. And somebody else files the actual 1099 form, miscellaneous, for instance, for you when you did not report it on your tax return. That's a big no-no. It's a big red flag. Now, claiming false business expenses, that's another red flag. A poorly prepared return, if return looks bad, it's bad, okay? Bad math on the return, it's very, in today's day and age, most tax practitioners use software. It's very hard to make a math error by addition or subtraction on a return. No return is filed at all. That's bad, obviously, red flag. Why didn't you file? Excessive charitable donations without proper documentation. If you're claiming you donated a lot of cash or clothes and you don't have the receipts for it, problem, flat red flag. Keyword is excessive. Home buyer credit claim without proper documentation and unreported foreign accounts. These are just some of the main red flags, most common audit red flags that the IRS looks for. Next, how do I stop the IRS from garnishing my wages, levying my bank account, or seizing my assets? Well, you must respond promptly to any and all notices you may receive from the IRS. Be proactive than reactive. The IRS will not garnish wages, levy bank account, or seize assets without providing ample warning. The next step is to stay in compliance with the IRS, get up to date on tax filings and payments, and the IRS will have no need to garnish your wages or levy your bank account. I hope this answers it. Next question. Is it true that the IRS can put you in jail for not filing tax returns? Well, if you have intentionally not filed your tax returns, that makes it illegal and can result in punitive damages for up to $25,000 and 1 year imprisonment. As a reminder, do you remember Al Capone? Yeah? Well, he didn't go to jail for killing people, for robbing, for extortion, racketeering, or anything else that he did. He went to jail for tax evasion. That's when you could actually go to jail for tax evasion. And last question, but not least, what are some examples of the documents IRS will expect me to produce to review my case? All right, IRS wants to see proof of income and expenses in order to determine if there's anything left over for them to take besides assets. They will request recent pay stubs, bank statements, utility bills, mortgage or rent payments, leases, investment documents, and more will depend on case-by-case basis. Now, you could contact my office directly and schedule your one-on-one free strategy session or actual conference call between me and you so we could go over about your specific situation. It will be free of charge for the next 10 people that schedule. I will not charge you for consultation, and I will not charge you for evaluation of your case, doing the actual analysis to see what you qualify for. I thank you for your time. I thank you for viewing this webinar. It's been my first live webinar. Did not go according to the plan. But in either case, I thank you for taking a note and reviewing this, sticking around with me. And if you have any questions, if you'd like for me to discuss your case in particular in more details, please take your time, schedule your call, and we'll take it from there. Thank you so much. It's been my pleasure. Have a nice day.